Today, let's talk about how to read Forex charts for beginners and 7 critical mistakes that destroy 90% of new traders. If you have ever opened a Forex chart and felt confused, overwhelmed, or tempted to enter trade, and you later discovered that you made a very wrong choice, you are not alone, and this video is for you. 90% of new traders do this and lose money not because the market was manipulated, but simply because they misread the chart. They really do not understand the chart, they misread the chart and they trigger trade, and unfortunately it never go as planned. So today I will show you the 7 critical chart reading mistakes that quietly destroy beginners, and of course how to avoid it. Welcome to Forex Without Noise. If you're joining my channel today, please do well to turn your notification button, do well to like, and as well share with your friends. Of course, we release educational video like this every day, and the only way you can get updated is when you turn on your notification button. Do well to watch this video to the end, and believe you me, you will have a lot to gain from it. Okay, so now, so many beginners always tempted to complicate their charts. The best way to read your charts is to keep it simple. Very simple. Don't complicate it with so many indicators, okay? If you do that, it's definitely going to hurt you. First of all, what is even a Forex chart? Let's assume that you've not traded before. Okay, what is a Forex chart? A Forex chart is simply a visual representation of the market movement. Most traders do represent this with candlestick. There are other ways of representing it with a trend line, bar chart, as the case may be, but the most popular one is the candlestick. So it's just a visual representation of the market movement. It shows you how the market moves, if the market is moving up or the market is moving down. The market chart actually tells a story, and when you do not read that story correctly, trading becomes like a scam. So you must understand the story very well. If you do not understand the story very well, you're going to mess up everything. Okay, so let's break this down, the 7 mistakes that causes this confusion. Okay, let's break it down one after the other. Mistake number 1 you must avoid is treating indicator as a magic signal. Of course, there are so many indicators out there. We have the MACD oscillator, we have the RSI, we have the Bollinger Band, we have the stochastic, and the rest. Okay, do not treat it as a magic signal. So many beginners treat it as a magic signal, like, oh, when they just see moving average crosses over, they run and place a buy or a sell, as the case may be. No, what to do instead is learn price action first. Learn price action first. In fact, there's a video in this channel where we talked about price action. Go and look for it. Okay, use indicators as confirmation, not decision maker. Okay, so price action is going to tell you the direction of the market, while you use indicator to confirm your direction, not just make decision based on it. Okay, keep your chart clean. Make sure that your chart is clean. Like I said earlier, keep it simple. Don't complicate it. Mistake number 2, ignoring market structure. Ignoring market structure. So how would you even make profit when you don't understand market structure? Market structure is simply price moves in trend and ranges. So trading without knowing, okay, you have to understand this thing. This leads to buying at the top and selling at the bottom. And when you do this, it's going to hurt you eventually. So simple structural rules beginners should follow. 1 is higher highs and higher lows, which means uptrend. Lower high and lower lows mean downtrend, and sideways price means no clear direction. So when the market does not have clear direction, we say that the market is consolidating. And what are you expected to do at that point? Stay away from the market. Stay away from the market. When the market is moving sideways, stay away. Okay, if not, you're going to get trapped. So another mistake you have to look out for is drawing support and resistance line incorrectly. In this my channel as well, there's a video out on that channel, you have to look out for how to draw this the support and resistance line correctly. Okay, so the correct approach to actually draw your support and resistance line is to focus on obvious swing high and low. Focus on obvious swing high and low. Use zone instead of single line level, and of course fewer levels are more powerful than many. There's also an indicator that can actually do this for you. We have one indicator that can actually help you to automatically draw your support and resistance. If you need it, you can actually contact us for that. It's going to draw it for you accurately without you having to do anything. Okay, so mistake number 4 you have to look at as well is entering trade in the middle of the chart. This mistake alone destroys so many accounts. New traders see price movement and enter late, and of course when you enter late, it's going to hurt you so badly. So professional traders wait for price to come to key levels before they enter the trade. Okay, so behave like a professional trader. Another mistake you have to look out for is not understanding time frame. You have to understand time frame. Of course, what is your goal? You have to understand, are you a scalper, are you a swing trader, and all that. So once you have decided your style of trading, you must now choose a particular time frame that actually suits your trading style. So mistake number 7 is overtrading based on every candle. Okay, so many of you just enter trade on every candle. If you see a bearish candle, you enter a sell. You see a bullish candle, you enter a buy. No, don't do that. Okay, if you do that, it's going to hurt you so bad. Okay, that's not how to trade. You saw a bullish candle doesn't mean that it's an upward trend. Okay, you have to avoid that. Mistake number 7 is letting your emotion control your chart decision. Letting your emotion to control your chart decision. You must not allow your emotion. In fact, I do tell people that trading is a warfare on its own, and if you are not emotionally strong, man, this trading of a thing is not for you. So you have to be emotionally strong. You don't have to allow anything to control your emotion. So if you do that, definitely it's going to hurt you so bad. Okay, so my final advice for you is that Forex charts are not your enemies. Okay, don't see it as your enemies. They are just information provider. Forex chart is your information provider. They are not as difficult as you think. It's you that is making it look complicated. Okay, the market does not punish beginners for being new. Okay, yes, the market does not punish beginners for being new. Okay, it punishes them for being impatient, emotional, and undisciplined. Okay, so don't always take it personal and say that the market is doing this, is doing that to me and all that. No, all those claims are not true. If you do the right thing, you get the right results, or if you do the wrong thing, you're definitely going to get the wrong results. So if you avoid these 7 mistakes I have mentioned, you already put yourself ahead of most new traders. Okay, so now before I go, if you are visiting my channel for the very first time, do well to share with your friends, like the video, comment your thoughts in the comment section, and if you also want to have an in-depth knowledge of this topic, of course I have written on this extensively on my blog post. Of course, time will not permit me to read everything I have on the blog post word for word, so I encourage you to visit the blog post in the link in the description and go there and read extensively. In fact, I wrote so much about this topic. Okay, so if you want to get an in-depth knowledge of it, I encourage you to go read up on our blog post. Okay, see you in my next video. Bye for now.